oil prices are down from 7-year highs to around $94 a barrel today. And I have Victoria Ejugwu, an analyst at Vetiva Research. She joins me to discuss what's at play. Thank you so much for your time on the show today. Victoria, can you speak to some of the dynamics we're seeing play out, especially in terms of the tensions we're seeing with Russia and Ukraine and the impact we're seeing on the oil price movement?
Yeah, okay, so I'll first start by saying that throughout this month, we're seeing market trade sentiment about global tensions, supply disruptions. So the market has been placing premiums on what could potentially happen if Russia goes to war with Ukraine. We also have tensions in Libya, UAE. So the market has been putting in premiums, and that's why you're seeing prices rally up to this point. While fundamentals are still strong and will remain strong at least for the first half of the year, what has been happening is basically the market trading sentiment around all of these events.
But Victoria, when you look at the possibility of getting to $100 oil, I'd like you to speak to the implications for countries like Nigeria.
Well, it's a double-edged sword for us as Nigerians because we trade crude. So that should mean that we will earn more revenue for us. But at the same time, we are also energy deficit, and we also have to impute refined fuel. So while we're earning more, we're also spending more on trying to reach Nigeria's energy demand.
All right, but let's get into other news in Nigeria now, talking about that news around the supplementary budget from the president that includes the amount for subsidies. What do you make of this development, and how do you see things playing out?
Well, it's the same old story where the NNPC has continued to cry out that it can no longer carry on subsidy payments in its books. But at a time where economic management has been poor, this is certainly not the right time to remove subsidies. I think what the government needs to do is take out time to figure out how they intend to put in structures that will aid the country as a whole and, cushion the effect for Nigerians before even talking about subsidy removal. So it's always a positive negative for us. The NNPC is crying, but at the same time, we can't keep paying subsidy. At the same time, Nigerians are crying, the economy is hard. So it's just going to be all of these conversations until until the government actually sits down to, try to structure and restructure things that they can do to cushion the effects for Nigerians.
Yeah, because when you look at it, even we're having challenges in terms of production as well, because we're struggling to meet our OPEC quotas.
Well, yes, we are, but from my view, IOCs and companies generally in the oil and gas sector should be better prepared for, ramping up production. So what has happened was, like I said in the last interview, is we were facing a lot of technical and operational issues because most of these oil fields weren't, maintenance wasn't priority as at the time when the market was facing a downturn. So I think that companies are now better prepared. There's now maintenance is now priority. The country should be fighting for more investments in the sector. So we should see, like we have seen in January, production has started ramping up. Force majeure that was declared in December has been lifted, and that's what we could reflect in our January numbers. So that is expected to be the trend, less frequent downturns, and then that should translate to more revenues for us.
Yeah, but would you say it's a capacity issue? Because when you look at some of the local players and what's seeing play out in the markets here, especially for the listed companies, we're seeing the oil and gas sector is still one of the best performing on the bourse, currently up over 20%.
Yes, so like I said, it's still sentiments around high oil prices. So the market is pricing in if prices are at this level, these companies are going to report strong revenues, strong cash flows. So that has affected or that has put in positive sentiments for public companies, publicly quoted oil companies.
Well, what do you see your outlook? What's your outlook for the oil and gas sector on the local bourse? What's your outlook for that for the rest of the quarter and even second quarter?
Yeah, so our outlook is generally positive. We expect that the oil market fundamentals will remain strong for the rest of the year. So the global scene is still dealing with a lot of underinvestments. While we expect that oil prices will trend downwards, they would still remain strong for the rest of the year. So oil companies on the exchange are expected to still report strong earnings, and as such, we believe that the sentiments to generally be positive for them